There is great news for anyone who likes money and owns real estate. Mortgage rates are falling, and this is a huge opportunity for all of us to make some additional money. So this is the 30-year mortgage rate going back 1 year. It was a little bit above 7.2% exactly 1 year ago, and it currently sits at 6.46%. That's a drop of 0.75%. But some people might be all the way up here. That's a big rate right there. That's from 7.7%. So we're 1.25% lower than the peak in the last 1 year. Now, guys, I don't know where you got your mortgage on your investment property or even your personal home. If you've bought in the last year, it may be time to take a look at refinancing. I know you might sit there and say, but Paul, I just bought 7 months ago. I get that. But let's put it this way, guys. Let's do the math on this. Let's say you have a $300,000 mortgage on your rental property, for example, or your home, doesn't matter. They might charge you 1% to refinance. That's $3,000. Okay, $3,000 cost. Great. Now, let me ask you a question. If you save 1.25%, you're going to save $3,750 per year for the next 30 years. Let me ask you a question. If I told you right now, give me $3,000 and I'll save you $3,750 every year for the next 30 years, would you say yes? Of course you'd say yes. That's the point. In fact, even if this cost was $12,000, I look at this and think, okay, what's my break even? 4.5 years? Guys, can I ask you a question? How many places today can you invest $12,000 and get $3,750 back every single year? I'm sorry, it's 3.5 years. Not even 4.5 years, it's 3.5 years. Where can you get that kind of return? That's what I want you thinking about when you think about money. You got to sit there and say, what's my cash outlay and what's my return? That's the way it is, especially with real estate. If you own your own business, you can allocate the capital. And if you see on our main channel, we talk about this with companies that can reinvest at higher returns. This is a reinvestment at a much higher return. Now, let's say you're not the fortunate one who's going to save 1.25%. Let's say you're only saving 0.5%. Okay, so 0.5% of $3,000 is $1,500. If you want a 15% return on your money, you divide this by 15%. Basically, it says as long as you can refinance for under $10,000 in fees, you're going to make your return here. Because if you spend $10,000 to refinance, which is a big number, by the way, guys, that's 3%, 3.33% of your mortgage balance. You're going to save $1,500 per year. And again, I ask the question, where can you invest $10,000 today to make $1,500 a year for the next 30 years? Tell me where you can. It's very difficult. And that's what makes real estate so great. You lock in your rate, you get that rate, and you're going to have it for a long period of time. But maybe rates fall and you can take advantage of it. That's what's important. So far, before we get to further, this is our new real estate channel. We just launched it. We love this channel. We love talking about real estate. I personally own 1,000 apartments and houses across 5 different counties, 5 different states, and 5 different countries. I know real estate very well. I can help you, even if you're not ready to buy real estate, I can help get your framework together. That way, when you are ready, boom, you can take advantage. If you currently own real estate, I assure you there's a way for you to make more money on your property. So do me a favor, like the video, subscribe to the channel, and comment below on other questions you may have, as well as other videos you want to make. Now, how can rates change the market? Well, guys, we all saw what happened when rates collapsed. Rates went down so much and everybody loved it because their property values went up. Sure. But in the real estate investment world, what I found was we were competing with a lot of money out there. I was buying big apartment buildings and I was getting outbid left and right. You know why? When money's easy and money's flowing, people are more reckless. I want you to change your mindset from I want lower rates to I want higher rates. When there are higher rates, there's less money chasing fewer deals. That means there's less competition. That means returns and prices stay lower. That's what you should want. And the great thing about real estate is there's no billboard on top of your property saying how much it's worth. So all you need to do is focus on getting your rate locked, have that mortgage, and how do you drive up revenue, profit, and therefore value in your property. That's what's key for real estate. You can put the blinders on to value as you drive revenue and profit up. That's what's key. So if rates go up after you've locked in, what do you care? Go buy more. You're not affected on that one property. In fact, as rates go up, my guess is your rents will probably go up. Now, guys, if you watch our other channel, we talk about people always asking questions. What does Fed policy mean? What does the economy mean? What does it mean for my investments? Guys, when it comes to interest rates, it should never affect the way in which you buy, ever. The only thing of real estate interest rates will affect you is if you currently own property and rates go down, you have to be aware, should I refinance? Should I spend the money to refinance and save myself some money? Now you might sit there and go, well, Paul, come on, I got to care about rates that I'm buying. No, because as rates go up, cap rates will go up. As rates go up, it's going to be harder to buy a home. So therefore your rents should go up sizably with that. We don't find it easier. We find it harder when rates are lower to get good deals. Let me give the analogies. Over 2 years ago, when the rates were so low, 3.5%, 4% on apartment buildings, we'd make offers and they'd tell us, dude, you're 30% below our ask. You're 30% below everybody else. Get out of here. The second rates went up, all of a sudden, we were in the final running on 5 or 6 properties, and we just closed a 200-unit property in the Louisville, Kentucky MSA. There's no coincidence there. Rates go up, all of a sudden we're competitive. Why? Because when rates are lower, all the dumb money's out there want to deploy capital. Rates, real estate values are going up. Let's go jump in as soon as possible. That wasn't the way it was for us. We sat there because we didn't assume these rates would stay low forever. I still even hear people saying, don't worry, when rates go back to 3%, you can refinance. Guys, our 3% mortgages were very, very, very extreme outlier in history. That's okay. Your job as a real estate investor is not worry about interest rates. Your job as a real estate investor is to buy your property, renovate it, raise your rents, and refinance and do it all, repeat over again. That's the key for being a real estate investor. And if you do that over and over again, you're going to wake up one day and go, holy shit, I'm extremely wealthy. And the great news is it probably takes a lot less money than you think to get invested in real estate. So guys, if you want to learn the step-by-step guide to investing in real estate, do me a favor, watch this next video. I'll see you there.